Hey Dave, I wanted to shoot you a quick video, bring you up to speed on some recent changes we've seen on the conventional loan market. Thought this would be some good information to share with your clientele. Basically, what has taken place just recently on the conventional loan side is that there's been some adjustments, is the buzzword in our industry, as far as credit scores when it comes to people's home loans. What do I mean when I say an adjustment? I guess the best way is to really refer to it as a tax. Because what happens when your credit score is not at the top tier? Fannie Mae and Freddie Mac are implementing pricing adjustments. What does that ultimately boil down to is someone with, say, a 740 credit score compared to, say, someone with a 680 credit score. Ultimately, what you're going to see is probably a difference in that interest rate of between 0.375 and 0.5%, which obviously in a rate-sensitive market that we're in, that can play a huge factor in someone's overall situation. For example, on a $200,000 loan, it's going to equate out to about a $50 difference in the monthly payment, which doesn't seem like much, but if you add that up, even over a 5 or a 10-year period of time, I think the math speaks for itself on that. So where I'm going with this, what I really want to encourage is just people to get involved, understand what's going on as far as credit. I'm not going to go into a lot of detail on that right now. I fully intend on putting together some other pieces for you regarding that. But some of the things we want to keep an eye on, for example, is your balance to limit ratio. What does that mean? Let's say you have a $10,000 available credit limit on your Visa or American Express or whatever the case may be. But if you've got an $8,000 balance, you're running at an 80% balance to limit ratio. That will, over time, start to cause some negative weight against the credit scoring models. In a perfect world, the magic number is at about a 30% balance to limit ratio. So what someone might want to look at doing if they've got a high balance on one card and a very minimal balance on another is maybe looking at doing a transfer and getting some of that weight balanced out a little bit, ultimately hopefully to take some of the weight off of that scoring model. So look forward to doing a couple more of these in the future for you, just to kind of give some information out there. It's very much a score-driven economy, and please don't confuse your credit score with your identity. Your credit score is something completely different. Unfortunately, in the mortgage world today, it's the first thing that the banks look at as far as qualification. But there may be some ways if you're not necessarily buying right now, if you're thinking 3 or 6 or 9 months out, let's get a copy of your credit report. Let's take a look at what you've got going on and determine if there's some ways that we could maybe help get those scores up, ultimately to get you qualified for the best mortgage program that's out there to meet your needs. So this is Sean Goebel reporting live at Paramount Mortgage on behalf of RE/MAX Team Galt. Hope to see you guys soon. If there's any questions you've got, don't hesitate to shoot me an email. Pick up the phone, give me a call. Happy to help you out in any way. Have a good day.